guys, I'm back with another YouTube video today, and today's YouTube video is how I made $6,350 today trading Nasdaq. And there's a little explanation towards why I exited early. As you can see, we did not take full profit and we didn't take that draw on liquidity on Nasdaq. However, we did on ES, and some people were kind of confused on how that works and why that happens. So I'm going to go over explaining that, how SMT divergences work, and also my whole thought process on the trade. So going into the day, I notified Discord that we did tap into a 15-minute bearish fair value gap and we saw immediate rejection. So far, my bias is fully bearish, and it's a good sign that sellers are still defending that area. And as long as price stays below that imbalance, then we should be fine as far as taking shorts. So these were the two targets. We had this high over here and these lows right here. So we also had this 24550 target, which was around right here as a high if we displaced higher. And let me go based off what market did. So market opened right here. So market opened right here and we immediately reject higher and tap into a 5-minute fair value gap. So once we tap into this 5-minute bearish fair value gap, we immediately just start consolidating inside and get a nice displacement out. Once we displace and actually break out of that range, this is when I'm like, okay, shorts is looking like it's perfect. I don't even want to take longs anymore. As long as I can get a nice entry confirmation, I'm fine taking shorts to these lows over here. So on top of that, that added to my conviction even more is we had this 1 hour fair value gap that we were literally invalidating while we were going lower. Let me show you. So yeah, as you see, we have this gap over here and the candle was practically almost all the way through it. Now, what I want to also say is, obviously, you can't just sit here and wait for the 1 hour to invalidate a fair value gap and then take a trade, because you're going to miss out on almost on 99% of trades. As long as you can see that it's about to take it, that's fine. As long as you can see it displacing through it and it's not rejecting upwards from it, then you should be fine. As long as you're actually seeing that it's proceeding lower and it's going to take out the draws. So my full explanation for this, let me just read it to you guys. I was fine not holding to take profit and exiting early around 40 points, because my full take profit was about 55 points, and that's because ES took the draw first. Now I'll go over that after this. The full execution was because of a 5-minute rejection confirming the entry and clearly hourly invalidation. So that fair value gap getting invalidated was also good structure to the trade. Also, it was paired with ES also moving lower, which is super strong. When you have a super strong bias if both correlated pairs are moving lower. And I took it with 2 minis and I went break even at this internal low right here. So either way, if I didn't exit early, it would have been a complete risk-free trade. Actually, I would have made some profit. But overall, I'm glad that I did exit a little bit early and I was actually able to secure some sort of profit, especially on my 5 accounts, so it added up a decent amount. Yes, it would have been better if I held it all the way to TP, but not every trade is going to be perfect and A+. You need to adapt as a trader to the market conditions. So as you see right here at the 7 a.m. candle, well, for me, 7 a.m. Pacific time, we did not tap that draw on liquidity. But as we see on ES, exactly at 7 a.m., we actually came down, took that draw on liquidity, and then we started proceeding higher, and then we actually dumped all the way and took more draws on liquidity that were farther down that haven't been taken yet. So I was watching ES the same way as I was watching NQ, just like this. Now, the second I saw ES push even a little bit close, like 1 tick away from that draw on liquidity, and I can see that Nasdaq is still over here, this kind of proved to me that I'm already have to be very, very careful. And the second I see immediately any sort of rejection on Nasdaq, then I need to exit that trade. And obviously we got this nice rejection coming over here, or about here. I ended up closing the trade because I can see that we're rejecting. ES already took the draw on liquidity. ES is a correlated pair to Nasdaq. As you guys know, S&P 500 is a top 500 tech US stocks. Nasdaq is a top 100 tech US stocks. They're very correlated. They literally move the almost exact same. If they don't move the same, that's where SMT divergences come in hand, or stuff like situations like this where one takes a draw, the other doesn't. Whatever is the leading index, typically people trade that one. So most likely people would have traded ES today. However, I don't really even see a decent setup. We actually, the best entry would have been here, which is not even a 1-to-1 RR, and you're pretty much going short off a low. I usually like shorting off not lows that I can put my internal draw on liquidity as my low for my break-even point. For example, here I entered here and I have this as my break-even point. If I was to enter here, I have nowhere to go break-even. I just have to pretty much guess a break-even, which is not obviously valid. So overall, that's the full reason why I ended up closing early. And I do really recommend you guys to be watching ES while you are trading Nasdaq. It is very recommended, especially in volatile markets like this. As you see, market opened and we moved about, how much was it? Yeah, we moved almost 200 points practically. So it's a very volatile day. Now, yes, we did have some sort of chop around like this. But again, this is not really considered a chop in my terms, at least. Chop, what I consider, is when we're on the 1 hour or 4 hour and we're straight up playing ping pong. This is not ping pong because we're actually delivering. We're actually going towards the draws. We're actually moving towards something. Now, yes, we don't have like the most perfect candles over here. We are getting some sort of rangingness and consolidation markets. But as you can see, we are actually displacing. We're getting decent sized candles. So I was still fine taking an entry even after all this consolidation over here, but we were also consolidating in a 1 hour fair value gap. So there's context behind why every single time we consolidate as well. This consolidation over here was a 5-minute fair value gap. We were just holding in that point until we got rejection lower. And then same with this, we were just holding in this 1 hour fair value gap until we got rejection lower, which ES actually took that, and then we proceeded higher. So there is really a reason for chopping this. And after we did take this draw on liquidity, that's when major chop happened. Before we took those draws on liquidity, market wasn't really too choppy. And as you can see, when you have a solid draw on liquidity, and it's actually a draw on liquidity that will affect the market, and you actually know it's a correct A plus draw, is the second you tap it, or one of the pairs tap it, you will see market start consolidating like this. That shows that the objective for the day has already been met. Now, as far as which pair to trade, I specifically mainly trade Nasdaq. I rarely ever trade ES. If I saw a better setup, if I saw like a similar setup like this on ES, I would 100% took it, just because ES was also falling, and it was the leading index before Nasdaq. So obviously, to avoid getting wicked out like this, or not even hitting your take profit, you could have actually hit it if you took it on ES. A lot of people usually do that just so they can get the full take profit if they could see that one pair is leading towards the other. But I just entered on Nasdaq and just was ready to close early and at least secure some profits. Overall, SMT divergences work a little bit differently. So what that is pretty much, it's a lower low that's different than the correlating pair. So obviously they have to be correlated at all times, and it could be a high as well. It doesn't have to be a low. So for example, let me find an SMT divergence here so I can show you guys. Could probably find one at the top. Okay, so if we were to go over here, oops, where did I? Sorry, give me 1 second. Let me find one that I can show you guys. Okay, this is a perfect example right here. Okay, so let me open this a little bit. Okay, so as you can see here, we have a high over here and a high over here on Nasdaq. We have a high over here and a high over here on ES. Now, as you can see over here, the high from this point to this point is going downwards, and the high on ES from this point to this point is going higher. Now you might ask, okay, if they're correlated pairs, why is this one going up and why is this one going down? Why is the second draw on liquidity higher than the second one on Nasdaq? Now the exact reason for that is because ES actually swept out this draw on liquidity over here. So ES was able to come take out this draw on liquidity. Now this is a SMT divergence. As you can see, ES was the leading pair, took out this draw on liquidity, and what happens when draws on liquidity are taken? We reject lower. So the second we took out this high on ES, as we see, reject lower. Now you might ask, why did Nasdaq start retracing lower if we didn't take out this draw on liquidity? We didn't really take any draws on liquidity and retrace lower. Now, despite the fact that we did tap into a 1 minute fair value gap, we displaced the first one, we tapped into the second one. The reason for this is because of an SMT divergence. ES was able to sweep out the draw on liquidity, so technically Nasdaq doesn't have to anymore. They're correlated pairs. The objective has been met no matter what. Now it can, most of the time it usually does, or it might just wick it a little bit, but it doesn't have to. It's a lower probability trade if you're going to trade after the draw has already been swept by a correlated pair. Now, this doesn't only go for ES and NQ. It could go for any other sorts of correlated pairs. However, 90% of people usually trade NQ and ES. So this is the perfect example of a draw on liquidity that was taken out by ES. It was a high, and immediately after we started dumping all the way down to the next draw on liquidity. But Nasdaq never took out this high. Now, later on in the session, we might take it out. Okay, not yet. And realistically, we don't have to, but I'm sure we will, because I'm sure we're going to keep going higher and higher. But that's not going to be the reason why price is going to come higher. It's going to come higher because it wants to take out other draws on liquidity. This is not a valid draw anymore. From now on, let's say like this, let's say we're going to mark out draws on Nasdaq and we mark this out. Realistically, this draw on ES has already been taken. So it's already very low probability and it shouldn't even have to be hit. So that's the exact reason for SMT divergences and why I really recommend you guys watching out. Why I really recommend you guys watching out for ES while you're trading Nasdaq, or watch out for Nasdaq while you're trading ES. Because if you weren't able to see this, let's say you were in a long position right here, and ES took out this draw on liquidity, and you were still entering this, and immediately market started dumping, you have no reason why. This is the reason why, because we took out this draw on ES, so obviously we rejected lower. Now, the same concept kind of today, what happened, ES already took out that draw on liquidity, so realistically, market does not have to take out that draw on liquidity anymore. That is why NQ started rejecting higher. So overall, it was a pretty clean trade. I was able to make $1,270 on each account for 5 accounts, on 50Ks. So that's, yeah, around $6,350 in profit. Even though last week I did not trade completely at all, this was able to bump up my balance so I can realistically win another trade and request a decent sized payout. Overall, I notify Discord every single morning for all my draws on liquidity and any trade that I'm taking. I do have a trading glossary that teaches you every single trading term completely for free. And this whole trading Discord, I'm trying to make it where you can literally learn everything you want in this Discord, and it's completely for free. You can join with the Discord link in my bio or through the WAP link. I also do have a one-to-one where I specifically go on like calls with you. I text you with my personal phone number, teach you, have a full like 20-hour video long me explaining every single thing that I literally know about trading, the way I learned, and exactly the mistakes I made so you don't make the same. Overall, I'll just hold your hand through profitability with a money back guarantee if you don't get profitable. Overall, I hope you guys enjoyed this video, and I hope it helped you guys out a lot. I'll see you guys in the next